The number one best Forex indicator in the world, hands down. And basically all other indicators that you could possibly ever use are complete trash. And I'm going to explain why. And you may be wondering, is there some sort of holy grail Forex indicator that can accurately predict the future on a regular basis? And here's the sad reality. The sad reality is that 99.9% of indicators are completely trash and are not going to help you at all, because all these indicators are really doing is they're basically telling you what's happened with price, but it's telling you in the past. So it doesn't really have any predictive power about predicting the future. Now, this one indicator that I'm going to talk to you about does have more predictive power, in my opinion, than any other Forex indicator that's out there on the market. And I'm not just trying to sell you some sort of indicator. I'm going to show you how you can use this for free. And I promise you that this is going to be contradictory to what most people are talking about in terms of Forex indicators on YouTube. So make sure that you stay tuned. I'm going to talk about the number one best Forex indicator that's on the market that actually does have some ability to predict the future. Hey there, my name's Adam Winnig, and we made this channel to help make your trading easy, lucrative, and fun. So if you're new here, click the subscribe button and turn on post notifications so you don't miss out on other helpful videos like this. Okay, in this video, we're going to be talking about the number one greatest Forex indicator that's out there. And is that actually possible? Is there one holy grail indicator? And the sad reality is not really, but there is one, in my opinion, my studies and my understandings, that has a higher likelihood of being able to predict the future. Now, again, the sad reality is if you're, searching for the best Forex indicators, you're looking for some holy grail magic approach to some indicator that's going to give you a high chance of predicting the future. The reality is that you're just going to go from indicator to indicator to indicator to indicator, and you're going to end up broke likely until you figure this out. Because that's exactly what I did. I went from indicator to indicator figuring there's a magic combination or there's a magic setting on these indicators that once I get it, all trading will become really easy. And the reality is it's not really that way. I actually didn't even figure this out until I got lucky. I met a gentleman who was a 10-year bank trading veteran. So he went down this rabbit hole of trying to find the best Forex indicators. He went through trying to find the best strategies and all this sort of stuff. And he actually ended up writing this book, which you can download for free on our website. It's actually called Edge Trading Secrets, The Unspoken Laws of a Forex Bank Trader, How to Leave the Herd and Join the Smart Money. Now, what he talked about in this book is really pretty interesting. He says that why is it that 99% of people are failing in Forex trading? And he basically points to some major psychology problems that happen with retail traders, which I'm going to talk about. But he really says that understanding sentiment analysis is really the finest combination of technical and fundamental perspectives. Obviously, technical is looking at indicators, fundamentals, looking at the overall news and macroeconomic situation. But sentiment analysis is the finest combination of the two. And what sentiment analysis does is it looks at the behaviors and the positioning of different market participants. And I'm going to show you how you can actually read the sentiment via a sentiment indicator and how to use this to help give you an edge in your trading. Okay. So sentiment basically means the opinion, or more specifically, how each market participant translates their opinion of what's going to happen into positioning. Okay. Sentiment analysis, again, is the finest combination of technical and fundamental analysis. Now, in order to understand sentiment analysis, you first have to understand that the Forex market is broken into two components. There's the smart money and there's the herd. Okay. The herd is like retail traders. The smart money consists of banks and funds. Okay. And they're very different in the information that they have. They're very different in the psychology that they have. They're very different in the way that they diversify themselves, also in the amount of capital that they have. Okay. And as you know, the smart money is almost always making money and the herd is consistently losing money. Okay. So here's what we're going to do. So I'm going to show you how to actually use sentiment to your advantage. So this is a free tool that you can take a look at on myfxbook.com/community-outlook. And basically what it's doing is it's pulling in data from thousands of different retail traders, and it'll tell you the overall net position of traders. Okay. So if the red line is above the blue line, the red line is basically short positions, okay, or sell positions, and the green line is buy positions or long positions, right? So we can see here that clearly, and this is going to blow your mind, but clearly this is in an uptrend, right? You can very easily see that it's making, higher highs, it's making higher lows, higher highs, it's making higher lows, it's making higher highs, higher lows. It's clearly in an upward trend, right? But here, let's take a look at retail sentiment and what the herd is actually doing. Because here's the thing, if we know that the herd is almost always wrong, which they are, like 99% of the time they're wrong, then wouldn't it make sense that we would just want to do the opposite of what everybody else is doing? It would align us with the smart money and give us a higher higher probability of actually becoming a successful trader. So let's take a look at this. So price is clearly on the uprise. And what do we want to do? We want to trade with the trend, right? That's obvious. But look at what happens here. Price is increasing. And what does the herd do? The herd is increasing their short positions. You can see the short lots right here, right? As I go along, 40,000 lots, 43, 48, 53, 54. They're increasing the total amount of short positions that they are, even though the market is going up. So all these people are wrong. They're going into drawdown, they're hitting their stop loss, and they're blowing their account. But you can see that the net position is still short, okay? The herd is still short, even though the market continues to climb higher and higher and higher. And what happens here? You see this huge liquidation happen here as price spikes, and a lot of people get stop loss out of their positions. And you'll notice this on pretty much any currency pair, on any time frame, that the herd is consistently wrong. So hello, well, if the herd is short, then we most likely just want to be long, right? It's really simple. So we'll take a look here at the USD Mexican peso here. And this was just a very easy example. I mean, this has been, on a strong downtrend here for quite some time at this point, right? Well over a couple of months, okay? Strong downtrend. And what do you see? You see all green, which basically means what's happening. The herd is long, even though the market is falling down and downtrending. As you can see here, as the market moves lower and lower, the herd continues to go long, long, long. They continue to go long, 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 even though the market's falling, falling, falling. They go long, 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 long. Isn't that interesting? So what is actually happening here? Well, there's a few things that I'm going to show you how to put this together to actually become a more effective trader. Okay, so let me go back here and read from the Edge Trading Secrets book, which I highly recommend that you read this book if you're serious about becoming a trader. It is a little bit advanced, but it's still really important to do this. So you may be thinking, well, why is the herd always wrong? Why is it clearly an uptrend and why is the herd selling into an uptrend? Well, it's because they have some bad behaviors. Number one behavior is that traders subconsciously think that price is too expensive and they put in a new sell position in the up move. So this is the big problem here, right? So we can see here in an up position, the herd is putting in sell positions, as we can see here, because the herd basically thinks that price is too expensive, so it's going to come back down, right? And that's what is one of the biggest pitfalls of all of retail traders is that they basically buy low and try to sell high, right? That's what we've been taught our entire lives. But the problem is, we want to sell it when it's high, but you don't know how much higher it can continue to go or how much lower it can continue to go. If you're buying in a situation, how much lower could it continue to go, right? And that's where most people really mess up, okay? Behavior two is existing traders who are holding short positions since the market is going against them. They average into the losers in hopes that price will retrace, okay? So basically this means that if price continues going down, like you can see here, most retail traders, instead of just cutting their loss and trading in the direction of the trend, they'll average into the losers, meaning they'll take a buy here, then they'll take another buy here, then they'll take another buy here, right? In hopes that the market eventually retraces, okay? And this is a huge, huge problem for retail traders, okay? Behavior number three is that traders who are holding long positions that are in profit will take small profits as price goes up, thus reducing the number of long positions, right? So again, they will, take profit as price goes up, and so they'll get out of the position instead of riding the trend, and that will cause the net amount of long positions to fall and short positions to rise, okay? Next thing is that retail traders refuse to put a stop loss. They refuse to they refuse to put a stop loss. They'll move their stop loss or even cancel a stop loss as price goes up, right? So price goes up and it's going against them. They're in a short trade. They'll move their stop loss, or they'll even, God forbid, cancel the stop loss altogether. And this causes the herd to cut their profit short and let their losers run, basically. And that's the big problem, is that retail traders would prefer to take their profit short and let the losses run. Okay, they see they're in profit, like, I'm excited, I'm in profit, I'm going to take profit, right? And when they're in losing trades, they say, well, it's got to come against me, so I'll get it at a better price, right? And that's really the downfall. So when you break it down simply, this is the reason why the herd is almost always wrong, is because they have an urge to catch tops and bottoms. That's what almost all Forex traders try to do. They try to catch tops and bottoms, and that's why they're pretty much always in the wrong direction of the trend. And they hold on to their losses too large, and they cut their profits too small. So let's put this all together and teach you how you can become a more successful trader. Okay, now this is pretty eye-opening, right? You can see that here, that this is a free tool that, again, you can use, and you can see that, you want to be opposite the crowd, or you want to be contra crowd. Now, we've also put together a proprietary indicator called the Bank Secret Indicator, which basically pulls in data. Okay. And again, you don't have to use this, but I want to show you this because it's powerful and you could try it again for free for 7 days and you only pay for it if you feel like it's worth it. But based on what you've learned, check this out. So it pulls in data from literally hundreds of thousands of retail traders, from my FX book, from different brokers, from all over the place. And it tells you what the herd is. So it's like a snapshot of what's happening in the market right now. You can see the herd is 78% short. You can see that they're 22% long. Isn't that interesting? They're short, even though the market is clearly on an uptrend here, right? And you can also see this is kind of just a nice little feature where if it's blue, it's in an uptrend. If it's red, it's in a downtrend for all the different time frames. So it's kind of just helpful, right? And then it also prints supply and demand zones where price is likely to bounce off of, which is really nice. And it can even send you alerts to your phone and all this sort of stuff. But let's get back into talking about this. Okay. So what do we see here? We see prices clearly in an uptrend. And just like we saw in my FX book, we see the same thing here. We see that the herd's net short position continues to rise, where the herd continues to sell into an uptrend. Isn't that interesting? Well, let's take a look at another pair. For example, this is USD CHF. You can see that the herd is long, 79% long. So we would want to be short. Okay. We would definitely want to be contra crowd. And what do you see happening? Price is falling and the herd is trying to catch the bottom. They're like, okay, this is the bottom. I'm going to buy here. No, this is the bottom. I'm going to buy here. No, this is the bottom. This is the bottom. And they continue to try to buy to try and catch the tops and the bottoms of the market. Okay. And this is why most retail traders lose money. And simply by trading contra crowd or against the herd, it can give you a serious edge in the market. Now look again, it's just everywhere that you look. You can see that the herd is mostly short, 80% short. So we'd only want to be long, but what happens with price? Price is clearly trending upwards here, yet the herd continues to remain short. And look at this. This is just baffling to me, but as price moves up, you can see that the herd sentiment is short. They're getting shorter, they're getting shorter, even though price is rising high and high. How does that make any sense? So simply just, using the sentiment is a tool that can give you a massive edge. And this is arguably the easiest way to find if a trend is happening or not. Okay. A lot of people use different sorts of indicators to try to find if a market is trending. Well, the sentiment is actually the finest way that you can find the trendiness of a market. You'll notice that when this is like 50-50 or it's closer together, you can see that the market is not as much in a trend. And I'll try to pull something up for you guys really quickly here to show you. Okay, so this is actually a perfect example. You can see USD JPY, it's 52.48. So, the bears and the bulls are kind of battling. There's no clear direction. And what do you see happening with price? Price is kind of stalling. It's kind of ranging here. You can see it starting to range, or, it's quite choppy here. It's, even quite choppy right here. And that's really interesting. So when you see these numbers really far apart, you're likely in a trend. Or if you see them getting further apart, you're likely getting into a further trend. Like for example, you can see that these are quite far apart, 80-20, and you can see that the market is starting to trend. I bet you if you were right here, for example, these two numbers would be closer to closer, like 50-50 or something like that. Okay. So this is also an amazing way to predict the trend. Okay. So that being said, if you found this helpful, then consider trying the Bank Secret Indicator for free for 7 days and only paying for it if you feel like it's worth it at blueedgefinancial.com, or head on over there to also download our book, Edge Trading Secrets, The Unspoken Laws of a Forex Bank Trader. I promise you it's going to blow your mind. If you thought that this little video was mind-blowing, reading that whole book is going to totally change the way that you look at trading Forex. So again, go ahead, click the subscribe button, turn on post notifications, and we can't wait to see you in another video.